Hello and welcome back to another video. Today we are going to be discussing fair value gaps, and I'm going to be explaining it from the very basic level so that a complete beginner can understand what it is. Someone who's never heard of ICT concepts before, by the end of this video, should have a pretty good understanding of what a fair value gap is, and I want to really emphasize on why they're important and how they work. And so I will be using this PDF from T-Trades to talk about the specifics. And so full credit for this PDF goes to T-Trades, but this is a really great PDF, so I figured that I would use it as an example. And I will also be showing examples in the charts as well. So let's take a look at exactly what a fair value gap is. So this assumes you know what a candlestick is. So a candlestick is simply a price is open, high, low, and then close. So open, high, low, close. Or if it's a bullish candle, it opens, creates a high, or opens, creates a low, high, then close. But all you need to know is it just shows where price has been for a given unit of time. Now, this candle in between these two, it's a three candlestick pattern. A fair value gap forms when there's a three candlestick pattern where the low of the candle before and the high of the candle after form an empty area where there's just this candle body in between them, those two. And you can see it's denoted by these two lines. So then when price comes back into this area, it represents an entry point for you to go short. And the same is true for a bullish one. You have this three candlestick pattern where there's a high of one candle and a low of the candle after, and there's this empty area which represents imbalance in price, representing basically an area that price will likely come back to because it's an area between highs and lows that has a high probability of supporting price. So you can see that in this example, price comes up, pushes back into the fair value gap, and then continues higher. Now, I'm going to go over some examples in the charts so you actually understand how this actually works, and it's not just made up. This stuff is actually how price moves, and it's the real deal. So I highlighted this box as an example. You can see that this high and this low, this candle body's area in between is the gap, right? This is the fair value gap. So price came down into this zone and found support here and continued higher, right? So it marks entry points. Since this is a bullish fair value gap, it is an entry point for a long entry. Same right here. Notice the three candle pattern. High of a candle prior, low of a candle after. The area in between is the gap. Price comes back into this gap and then continues higher. Let's go over some more examples. Here we go. High of one candle, low of another candle. This forms a bearish gap since it's three red candles. Pulled over, price comes back in, pushes into the gap, and then continues lower. This is on the weekly chart, by the way, for the NASDAQ. Here we go. Low of a candle before, a high of a candle after forms this gap. Price comes back in, pushes into it, and continues lower. Low of a candle prior, high of a candle after, price comes back in, and continues higher. This one pushed a little further past. It went all the way down into this gap, but it pushed into this gap and then continued higher. And so it won't always respect these gaps. Price obviously isn't always going to respect anything, but it's just a matter of probabilities. It represents an empty area between highs and lows, and price wants to run through highs and lows. So if there's an empty area past highs and lows, it creates a zone where it may likely find support. So you can see, look at this example, right? Came back in, boom, got rejected, and then continued lower. Now, something that I will briefly say is, if you get a candle body close above, or a candle body close below, that represents inverse fair value gap. So an example of an inverse fair value gap would be, let's go over here. And we're not going to go too deep into this, since this is just a video on fair value gaps. But see this gap right here? When this candle body closes above, that represents an entry point to go long, because this fair value gap was completely ignored. It wasn't respected at all. And so this is now an entry point to go long, and you can see the rest was history. So now you might need to watch this video a couple times to really get the hang of it, but if you can watch it and really focus on what I'm saying, you can really get an understanding of this a little better. See, look at this. Daily fair value gap, pushed into it, continues higher. Daily fair value gap, respected it, didn't quite make it, pushed lower. But they are areas where price has a high probability of finding support. So now, let's continue the PDF. There's other forms of imbalances. There's not just fair value gaps, which we talked about, but there's also volume imbalances, which represents this gap in between candle bodies, and then opening gaps where the candles are not even touching at all, or not even there's a full empty area in between the two. There's just two other kinds of imbalances that price also comes to. And then there's different kinds of entries. There's right when price pushes into the gap and then instantly reacts. There's you can enter at the midpoint of the gap. That's called consequent encroachment. And you can enter once the fair value gap gets filled for an even better entry. This is sometimes people prefer to wait until the entire fair value gap gets filled. Your stop loss goes either below the fair value gap, below the candle bodies down here, or below the swing low. And then, as we talked about, this represents an inversion where price closes above, and when there's an inverse fair value gap, that represents an entry point to go in the opposite direction, because this fair value gap was not respected. So I hope you enjoyed this video. If you have any questions, let me know in the comments below. I really hope this was helpful and explained it so you can understand it. But I hope it was at least helpful to someone. So I'll see you in the next video.